This is the story of FTX's Sam Bankman-Fried, who became a crypto billionaire in less than 4 years, and how he lost most of his wealth in a single day. Sam Bankman-Fried, often referred by his initials, SBF, is the co-founder of FTX, the third largest cryptocurrency exchange, and Alameda Research, a trading firm. At the peak, SBF had $15.6 billion to his name. Now, he's left with just $1 billion and his initials. FTX soared to become one of the largest and most influential exchanges in the crypto market. However, its rapid ascent was matched only by its stunning fall, leaving investors devastated and regulators scrambling to pick up the pieces. About the founder, a 30-year-old crypto billionaire who wants to give away his fortunes, drives a simple car like Corolla, sleeps on a beanbag, and has a Robin Hood-like philosophy to make a difference to this world. Sam Bankman-Fried was born and raised in Silicon Valley as the son of 2 Stanford law professors. He studied physics at Massachusetts Institute of Technology, MIT, where he juggled several extracurriculars alongside his academics. He developed a keen interest in effective altruism, a philosophical movement that employs rigorous calculations to determine the most efficient ways for individuals to utilize their time, finances, and resources to maximize their positive impact on others. After finishing college, Bankman-Fried got a job at a big trading firm called Jane Street. There, he learned about a type of trading called arbitrage. This is when traders buy something for a low price in one place and sell it for more somewhere else. By 2017, the world of cryptocurrency was booming, and private exchanges were popping up everywhere. Bankman-Fried noticed that some crypto coins were selling for higher prices on certain exchanges compared to others. This got him thinking to use his arbitrage skills to make some money off these price differences. In October of 2017, Bankman-Fried took the plunge and started his own crypto trading company, Alameda Research, in Berkeley, California. His colleagues at Alameda praised his knack for finding clever ways to outpace other traders. At its peak, Alameda was moving nearly $15 million per day between different markets. In 2018, Bankman-Fried made a bold move by relocating Alameda's team to Hong Kong. He realized that the policies there were much more relaxed than in the United States, making it easier to do business. As Bankman-Fried's profits from trading grew, so did his ambitions. He began toying with the idea of creating a new kind of exchange that would challenge the traditional ones dominating the market. By early 2019, Bankman-Fried and his team were hard at work building their own crypto exchange. After 4 months of coding, they launched FTX in May. The rise of FTX. FTX quickly gained popularity thanks to its low trading fees and wide selection of coins for traders to choose from. The platform even allowed traders to use cash as collateral for coins, a feature that set it apart from the competition. In 2020, Bankman-Fried expanded FTX by opening a small branch in the United States. Then, in September 2021, he made the decision to move FTX's operations to the Bahamas. This move allowed the platform to operate outside the jurisdiction of the SEC, a regulatory agency in the United States. Despite taking only a small cut from each trade, FTX saw an average of $1 billion in daily trading volume by 2020. In 2021 alone, Bankman-Fried made a whopping $350 million in profit from FTX and another $1 billion from Alameda. Major investors like SoftBank Vision Fund, Tiger Global, Sequoia Capital, and BlackRock all jumped on board, betting big on FTX during funding rounds. By early 2022, FTX and its US operations were valued at a staggering $40 billion by investors, according to Forbes. The company's success was underscored by its rapid expansion into new markets and relentless pursuit of growth opportunities. FTX ventured into derivatives trading, decentralized finance, DeFi products, and even sports sponsorships, cementing its position as a dominant force in the crypto space. At the height of his success, Bankman-Fried's net worth reached a staggering $26 billion. Despite his immense wealth, Bankman-Fried lives a modest lifestyle that aligns with the principles of effective altruism. He drives a humble Toyota Corolla, shares a home with roommates, and follows a vegan diet. But he's not afraid to splash out on flashy corporate sponsorships either. He signed a sponsorship deal with Formula One and campaigned for FTX with a lot of celebrities and sports people. One of his most notable ventures was acquiring the naming rights for the Miami Heat's arena. At this point, FTX had a better valuation than the top running banks at that time. Fall of FTX. Despite its impressive rise, FTX was not immune to controversy and challenges. As the exchange expanded its operations and increased its market share, scrutiny from regulators intensified. Concerns over compliance, transparency, and market manipulation began to mount, casting a shadow over FTX's reputation. Bankman-Fried's seemingly unstoppable momentum came to an abrupt halt in early November when CoinDesk, a prominent cryptocurrency publication, released a leaked balance sheet that raised serious concerns about the stability of Alameda Research. The leaked report exposed a troubling reality. The majority of Alameda's assets were heavily invested in FTX's proprietary token, FTT, whose public-facing use was to give customers discounts and perks. FTT coins had unlimited supply and could be manipulated, unlike the limited supply of Bitcoin. As uncertainty gripped the broader cryptocurrency market, traders grew increasingly anxious about the potential consequences of a sudden decline in the value of FTT. Changpeng Zhao, the head of Binance, a rival exchange to FTX, announced plans to sell off Binance's holdings of FTT. This announcement triggered a mass exodus of traders withdrawing their assets from FTX's platform, fearing further losses. An influx of customer withdrawals and the notably close ties between FTX and Alameda led to the bankruptcy of both entities, causing losses in the billions and pushing the market valuation below $1 trillion. In a desperate bid to salvage the situation, Bankman-Fried was forced to turn to Binance for assistance. However, Binance had walked away from the proposed bailout deal, leaving Bankman-Fried and FTX in a precarious position. The fallout was swift and severe. Bankman-Fried's personal assets took a staggering 94% hit, causing his net worth to plummet to around $1 billion, as reported by Bloomberg. In December 2022, the US government took legal action, filing civil and criminal charges against Sam Bankman-Fried and senior executives. The charges alleged misappropriation of over $8 billion in customer deposits, facilitation of insolvency, and the creation of falsified financial documents inflated by investments in specialized tokens to conceal the deficit. Following the collapse, scrutiny turned to the restructuring attorney, who expressed astonishment at the pervasive lack of corporate controls within FTX. This raised profound questions about how Bankman-Fried managed to conceal his misdeeds for such an extended period. Moreover, the investigation prompted inquiries into the complicity of individuals and entities that may have facilitated Bankman-Fried's illicit activities. Regulators face scrutiny over potential lapses in oversight. Additionally, attention turned to the venture capital funds that had provided substantial backing to FTX. Were they partially culpable for the collapse? Lessons learned. The rise and fall of FTX serve as a cautionary tale for the crypto industry, highlighting the importance of transparency, accountability, and regulatory compliance. While innovation and disruption are hallmarks of the crypto space, they must be balanced with responsible business practices and adherence to legal and regulatory standards. Regulators play a crucial role in safeguarding the integrity of the market and protecting investors from harm. The FTX debacle underscored the need for robust oversight and enforcement measures to address misconduct and ensure fair and orderly markets. Furthermore, investors must exercise due diligence and caution when engaging with crypto platforms and exchanges. While the promise of high returns may be enticing, it is essential to thoroughly research and assess the credibility and legitimacy of any investment opportunity. For industry participants, the collapse of FTX serves as a wake-up call to prioritize governance, risk management, and compliance efforts. Building trust and credibility with stakeholders is paramount for long-term success and sustainability in the ever-evolving crypto landscape.